Hey guys, welcome back to the channel. In today's video, we're going to do our weekly webinar for Friday, June 25th, 2021. We're going to go over all of our positions, our swing positions here in Tastyworks in terms of closed positions and open positions and just see how we performed over this week and kind of what we're looking at going into next week. So if you guys are new here, I'm Tex and I share my journey with trading and investing in the stock market. As always, guys, if you're enjoying the video, please do hit the like button. It really helps support the channel, and I really appreciate that. So with that said, let's go ahead and roll the intro and get started with the video. All right, guys, welcome back. Another week in the book. So definitely happy with this week's results. Nothing over the top, just again, just kind of churning out pretty consistent weeks. I think I made a little over $400 this week. We did have actually a little bit of excitement this morning. I lost $1,000 doing a day trade on Netflix here in Tastyworks, but I was able to make nearly all of that back when I took another trade on Amazon. So we'll go over all of that in just a minute, but let's hop over here to the chat room first. I don't think we spend quite enough time over here. I just want to talk about some of the things that I've been posting. It's actually been kind of a quiet week in terms of opening new positions. Let's see, this week, where did we first get started here? On the 21st. So yeah, so right about here. All right, so I talked about the Caterpillar position that we had opened in last week's video. Pretty much first rattle out of the box this week. Tried to throw out a take profit order for a very small credit over what we received for opening the trade. Was not able to get any of that filled. I also put a working order out here to close one lot of the Tesla put ratio for a better credit than what we received for opening the trade, and that would leave 2 units running. So just kind of posting, you know, I'm trying to post the working orders as I have them working, and that would give you a little bit more time to take action if you're following along in the trades, or you're just kind of, you know, paper trading and just learning along with me. All of that is good. This is a new trade here, and I'm going to try to do a better job of putting like new or something in front of that, like I did over here just recently. Right here. So I kind of said, you know, new, so to distinguish the fact that it is a new trade, or maybe I should do like opening trade and closing trade, because I can imagine it would get pretty confusing. But so, you know, this was a new trade that we put on here. This is just a classic vertical spread, call debit spread, I should say. It was put on for $155 credit on the breakout over the trend line on Apple. We'll look at the charts in a minute. And obviously we need Apple to continue higher, because we do have debit at risk on that trade. So I try not to put too many trades on for debit unless, you know, it's a high conviction trade. So that was that one. That was a new trade from this week. And again, we'll look at all these in the platform in just a minute. So here was a trade that I filled. Was this a closing trade? Yeah, I think this was a closing trade. I filled one lot on the Tesla put ratio, because I was trying to fill it at 30, I think up here. Yeah, right here. I was trying to fill an order here, a closing order for one lot on the Tesla put ratio for 30. Couldn't get that filled, so I dropped it down to 21 and then got that filled. And then I filled 2 put ratios for, this is a new trade, a new opening trade, where I filled put ratios for next week, expiration cycle, playing off those same levels on Tesla, kind of the 500, 570 levels. Pretty solid credit there, 140 on that one, 138 on that one, was working another one, and I don't think that one ever got filled. I ended up filling a third lot a little bit later for a much lower credit. And then I just kind of was posting here, if margin is an issue, you can try to do a put broken wing butterfly with this structure, but you know, the credit won't be as good. So I try to fill it for at least a 60-cent credit if possible. This is kind of what the risk graph looks like. Kind of blow that up for you guys. So the original ratio spread was this, right, where I'm long 1 put at the 570 strike, and then I'm short 2 puts at the 500 strike. But the risk is undefined really on the downside, because we're exposed here with one naked contract. So if we can come in and change it to a broken wing butterfly by adding a long 360 put here, that caps off your risk. Your max loss at that time would be $6,900. And it dramatically reduces the buying power. This is not correct because I have an open position, but this would be the buying power on the trade right there, because that would be your max loss. If you are trading the ratio spread where you don't have this protective wing over here on that side, the buying power I believe is about $10,000 to $11,000. So it cuts the buying power in half if you can structure it into a broken wing butterfly instead of doing just the put ratio here like I was doing. And that might help you out a little bit if you're working with a little bit less buying power. It might also make you a little bit more comfortable having the trade structured in a way where you have defined risk to the downside. But you can see the mid price at the time that I posted this was trading for 75 cents. The NAT price was 42-cent credit. So that's what I was saying. If you could kind of try to fill it in between, maybe like a 60-cent credit in between the NAT and the mid price, anything 60 cent or better would probably be worth it, because you're collecting a decent credit. In terms of return on this amount of capital, it's not super great, but again, we were playing off the idea that the spread might have a chance to expand if Tesla sold off. And after we put this trade on, I think a day or two later, Tesla broke out higher. So, obviously you'd just be walking away with the credit received. So that was another idea that I had posted in the chat room. And just taking a look here, you can see all of the orders that I had out trying to fill and never could fill for that third lot on the put ratio side. So, and then here was a trade. This was definitely a bonehead mistake that I'm going to talk about here in a little bit, but I opened a put credit spread on Tesla because I was kind of playing around with kind of adding to the profit potential of the put ratios that I had on. And when I was initially structuring this, it looked like I basically had a guaranteed profit unless Tesla sold off all the way through my put ratio, which I was not even close to expecting that. But I totally missed the fact that in the risk graph, there was this huge valley of death, like a $6,000 valley of death. If Tesla had sold off to kind of in between the put credit spread and the put ratio. So I ended up taking that off for a bit of a loss. I opened it for a 30-cent credit and I closed it for a 33-cent debit, which with 14 contracts was, I think, like a $60-something loss. And it was completely unnecessary because the next day Tesla had a big gap up and just really ran higher, and it would have been a really nice winning trade. So just a total bonehead move there that, kind of kicking myself about. But let's see. Other than that, I did open a new trade yesterday. This is a call ratio on Netflix because I was kind of targeting the gap higher. Taking a look at Netflix's chart here. So we had this unfilled gap here. I haven't really marked it out here. Let's see. The bottom of the gap technically comes in about there, and then you've got the top of the gap was here, right? So I put this trade on this day right here. I think it was the 24th. Yeah, it was on the 24th. I put that trade on right here because I like how Netflix was rounding back up into the bottom side of the gap, and it looked good to do a gap fill. But overnight, last night, they had an upgrade, pretty big upgrade, and we just gapped into the gap. So it's not super ideal, but that position is doing pretty well. We're actually long. Let's see, we're long here at the 130 strike, so that call is just about in the money, and then we're short 2 up here. So this is your ratio spread where we have this call vertical on plus a naked contract up here. And as usual with this type of spread, we're looking for a move up into the spread, but not through the entire spread. And it looks like we're going to get it. So right now I'm going to leave it on into next week, because if Netflix does kind of move higher into next week, the spread should expand a lot more for us. And we could make several $100s on that if that happens. So that trade is actually looking pretty good going into next week. And I think that's pretty much it. Let's see. So this is just a closing order on one of the put ratios that I had to open on Tesla. So yeah, that's about it. Posting in the chat room. Let's go ahead and jump over to Tastyworks and just take a look at our positions actually in the platform. So here's the Apple trade. We were up about $40 at one point on this. Kind of expand this down. You can see just a classic call debit spread, right? So we're long the 134 strike, and we're short the 140. So a fairly wide call debit spread that has, good room to expand. if Apple could continue with this breakout higher. Let's take a look at the technical chart on Apple here. Hop over to the chart. Let's go to Apple. Okay, so here is, there we go. So here's the breakout on Apple that we were looking at. Broke trend. I opened the spread, I think, what day did I open that on? I think I opened it, let's go back over here. I opened that on 6. Did I just go past it? Where is it? Oh, here we go. 622. Okay, 622. So I opened it on the breakout day. That's right, because I remember I took a loss day trading Apple in the failed breakout in the morning, and then it broke out in the afternoon. So once it came back up and broke out in the afternoon, that's when I opened that trade. So we're at the 134 and 140. So that brings us in here. This is our long strike here, and our short strike is up here at 140. Right. So for max profit, this is just a classic vertical spread. Obviously, we want the stock to trade up into our spread. And for us to get max profit at expiration, we need Apple to trade through the entire spread. So we need Apple above 140 at expiration to realize max profit. Now, we're not really putting trades on like this expecting max profit, but I definitely think that, you know, Apple still, it's pulling back a bit now. As long as it holds over this trend and it can round back up, I think it still has a chance. And I did open this trade up with a bit of time till expiration to give it time to work out. So we have 21 days, July 16 expiration on this. Since we did put it up for a debit, it's a little bit more important to give yourself time for the trade to work out. So we'll see. I think, you know, depending on what Apple does next week is definitely going to, you know, be a decision point for the trade. If we start falling back below trend here, and there's still a decent amount of premium to salvage from the spread, I might actually end up just stopping out on it. But as long as we hold above trend here and we could round back up, absolutely no reason to take the trade off. So that's the Apple trade. Nothing too exciting there. AMC, we have a put ratio here that is going to expire today. I'm sorry, a call ratio. This is where we're long the 100 strike, short 2 of the 140s. We collected a $30 credit on that. AMC obviously did not make the move higher. It's currently trading at 54, and you know, for this to expand, we needed it to really break out significantly higher. Make a move closer up to our long strike at 100, and it's a long ways off from that, but that's fine. We just kept the $30 credit on that trade. I opened another call ratio here with a little bit lower strikes for next week. So we're long the 100 as well, but we're short the 135, so not too much different. We were only able to collect a $6 credit on this one. So this one, not so much really put on for credit collection, but for just the off chance that AMC decides to find some legs and break out higher next week. It's not looking good right now, but that's the beautiful thing about this. It didn't cost us anything to put the trade on. So if AMC never makes the move higher, we just, you know, we at least covered the cost on the trade. So nothing new there, just a rinse and repeat for next week. Caterpillar, I think we talked about this in last week's video. I believe we had this spread open already. This is just a broken wing butterfly. And we did collect a $7 credit on this, which is not quite enough to cover all the fees and commissions on it. And Caterpillar never really sold off. We were long the 195, short the 190s, and long the 170s. So we really wanted Caterpillar to make a move closer to 190. So as with any butterfly structure, your max profit at expiration is always going to be over your short strikes. So if Caterpillar could have continued selling off this week and got closer to 200 to 190, this spread would have had a chance to expand. But if we take a look at the chart here for Caterpillar, it bounced. It never really made it. We needed it to come down here, and I think we put it on this day, one of these 2 days. And it looked good, like it might want to continue lower, but it just didn't do it for us. So we're just gonna walk away with that $7 credit we collected, but it's not enough to cover fees and commissions. So we will be a little bit red on that trade after fees. IWM, we opened a put ratio here, thinking that it might head lower. I think we opened this. Let me go to the chart and take a look here. So yeah, we opened this on this day right here. when IWM had broken back down into the range, and we were thinking that it was going to make a move back down here because our long strike was at 217, short strikes at 212. So if IWM could have moved down here to the bottom of the range, that would have brought it into our long strike where the spread would have expanded nicely for us. But it went the opposite direction. Unfortunately, we did not collect a credit on this. We did have to pay a $13 debit to open the trade, but it was only $13. So, after fees and commissions, probably going to be, I guess, about 14, 15, 16, a $17 loss, something like that. So not the end of the world, but that one just did not work out. So here's Netflix. I have a put ratio here that we've been rinse and repeating for weeks now, and none of them have really worked out. It's just been more, keeping the credit. This one we collected a $3 credit to open, which just covered the fees and commissions on the trade. And so it's looking like that's just going to expire worthless, and we'll just keep that $3. Here's our call ratio, right? So this is where we're long the 530 strike and short 2 of the 550s. And we just looked at it on the chart, but just really quickly going back over here. Let's go back to Netflix, right? So, we don't want it to go above 550. This is where our short strikes are. But if we look at the risk graph on this, as long as it can still continue to move higher into this pocket into next week, and it can even get all the way up to 550 and we'll still be fine. Let's take a look at the risk graph so you can kind of see what that looks like. So go to the curve view, go to analysis, and let's set it up so we're just looking at that call ratio here. And we are looking at, so we're looking at Monday of next week, right? So you can see where Netflix is currently trading. And this is kind of one of the things, this is kind of one of my beefs with the risk graph on Tastyworks. You can see right here, like I have the mouse hovering right over, let me just do this so I can get my drawing tools. Let's just do this. If I can get it lined up, there we go. So you can see I have the mouse hovering right over Netflix's price, right? This little flag right here is telling us where Netflix is currently trading. And according to this, my theoretical P&L right now should be $355. Okay, but that is not right at all. If we go look at our positions page, our P&L right now is $167, right? So we are up $167 on this trade overall. Let me just highlight this trade. Right, so here is our call ratio where we're long the 530 and we're short 2 of the 550s. So overall in this trade, we are up $165. But Tastyworks on the risk graph is saying that we should be up like 339. So it's like, it's overestimating by like half, right? So this is what I'm talking about on the risk graph. When you're looking, especially, it seems like, I don't know, it's probably like that on every spread, but definitely on the ratio spreads, it doesn't do a very good job of giving you an accurate estimation of what the P&L is. So whatever the theoretical P&L is that you see here when you're kind of analyzing these ratio spreads anyways, I would just cut that in half just kind of to get a ballpark figure to kind of figure out what your P&L actually would be, right? So you can see that on Monday, even if Tesla were to trade all the way up to 550, which is where our short strikes are, unless there was like a massive increase in implied volatility, we would still be very green. According to the theoretical P&L here, we would be up $567. So I don't think it'd be that much, but it might be like 250, maybe close to 300 or something like that. So if we can leave this trade on and Netflix can go for the gap fill, which would bring it up to about 540, I believe. Let's take a look at the chart again. So the gap fill technically is 538. It might push up a little bit higher. So anywhere between the gap fill between 540 to 550. This trade would have, let's go back to Netflix here. This trade would have lots of room to expand for us. Now, the later in the week we get, right, let's go over here and take a look at, let's go to Wednesday, right? So on Wednesday, look how much more the spread is expanding now, right? So theoretical P&L will be $730. So again, maybe cut that in half. So perhaps we'd be looking at $350, $400 profit or something like that. Up at 550, theoretical is 900, and you just keep pushing the date closer to expiration. Let's go to the day before expiration, and you can kind of see how the spread really starts to expand big time over here over our short strikes, right? So it still has room to expand nicely for us if Netflix can continue to trade higher into next week. So I'm going to leave this on because this trade has a really good chance to be a decent size winner. So overall, that's where we stand on Netflix. So this one's going to be gone after today. And this one we will leave on into next week, and hopefully Netflix can continue this move higher after gapping into the gap. All right, so the SPY trade, this is just a trade I put on today. It was originally a back ratio, and this is kind of the opposite of a ratio spread, not back ratio, a back spread, I guess you'd call it. So a ratio spread, as we know, let me pull one up here for you. Let's go back to Netflix. So when we look at a ratio spread, right, just like this, a ratio spread, in this case, a 1-to-2 ratio spread, this is where we are long one contract and we are short two contracts, which basically leaves us with a naked short contract, okay? A back spread is where we are long two, I should say a 2-to-1 back spread is where we are long two contracts and then we are short one contract. Okay, so with a back spread, we have no naked short contracts, but we do have one naked long contract. And so a back spread, really, it's harder to make money, but if you get a big move in the direction of the spread, it could really expand really nicely because you have two long contracts here, okay? So I originally opened this trade up as a back spread, kind of hedging on the fact that the SPY might have some type of a liquidation break today. And because these were day of expiration contracts, you know, they can really expand rapidly if that were to happen. And I was able to open it so cheap. I opened it for a total debit of $17. But once it became apparent that it was not going to make the move, I ended up taking off one of the long contracts. So now we're left with just a basic vertical spread here. And I was able to take off one of the long contracts for a $2 profit. So that reduced our debit risk for the remainder of this trade to $7. So I lost a total of $5 on this particular trade for, you know, kind of like the lotto chance that SPY would have a big liquidation break down to the 425 area where our long strike is here. We just didn't get the move, and that's fine. You know, it was just kind of a speculation trade that just didn't work out. So not a big deal there. TLT, this is where we had our straight butterfly, and this is kind of, you know, we were looking for TLT to make a move closer up to the 147 area. We opened the trade for a $33 debit, and because TLT is trading nowhere near 147, it dropped down to 141.61. You can see here, we're going to lose that entire $33 debit that we put on the trade. And right now, as I speak, the S&P, the SPY, is ripping to new all-time highs. So looks like I made the right call taking off that long contract. So let's go take a look at TLT though, so you can see the chart, what happened here. So we put the trade on we put the trade on this day right here because TLT had broken downtrend. It looks good to see if we could get a move up to here. This is where our right here. This is where our short strikes were. So max profit at expiration was right here. And the plan was to not hold it till expiration. The plan was to see if we could get one more move up here to our short strike area and take the trade off for kind of a 50% capture or something like that. 50% return, I think, or 100% return. I can't remember. I think it was 100% return on investment is what I was shooting for. And it just never happened. That was the high, and then now it's starting to pull back. So, you know, these are bonds. I'm not really familiar with bonds. They do whatever the heck they want to do. And, you know, for that reason, I'm glad that I only, you know, risked $33 on that trade because it just didn't work out. So that's fine. And then just a couple more here. Tesla. So this one, we have the remnants of a ratio, put ratio spread here that's going out, that's going to expire. We did collect a decent credit on that. We collected a $133 credit on that one. So that's the remnants of a 3-lot ratio spread. So all said and done with, I think it was about $447 in profit between 3 lots on that put ratio spread. We'll see the journal in just a little bit. So that's the remnants of that. That's going to expire out. We're going to keep that whole $133 credit there. So that was a good one. We have 2 lots left of another put ratio that I put on for next week's expiration. This one is where we are long the 570 puts and short 2 of the 500 puts. And again, we have 2 lots left on here. So there's two longs and 4 shorts. We originally had 3 lots, so we had 3 longs and 6 shorts. What's left of these two lots here, we have a $204 credit that we received, and you can see we're almost sitting at max profit on that. But I'm going to leave these last two lots on in case Tesla sells off next week, because right now it's looking like it's, it's trying to reject. Let's take a look at the chart. So we did break trend, and as long as we hold over this trend, I'd say it's probably not going to reject and come back down. But if we start falling back below this trend, that's not going to be good. I think anyone who got in long on this trend break is going to start bailing, and that could be a domino effect to really fall down. Now, I'm not predicting this at all. I'm just saying that since we collected a credit to open that put ratio that's way down here, there's really no reason to close it right now unless we need to recover some of that buying power. Because if Tesla does reject and really start to fall down, that spread could still expand. Even if the price doesn't get all the way down into the spread, it could still expand more on a drop lower, and we would be able to close it for a higher credit than what we actually opened the trade on. So that's all that's left on that one. And then I opened up another put ratio spread here, but this one is actually 2 weeks till expiration. So this is a July 9 expiration cycle. We're long the 600 and short the 500, and you'll notice it's a much wider ratio spread. Most of these ratio spreads we were doing kind of like 30 to 40 point wide spreads. This one is a 100 point wide spread. So I'm curious to see how a wide ratio spread like this actually expands. You can see that I collected a $3 credit to open the trade, so it cost nothing. It covered fees and commissions to kind of experiment with this idea. And the spread has already expanded up to $34, right? And as Tesla has sold off some today, the spread is already starting to expand for us. And if Tesla rejects and sells off into next week, this spread might expand really nicely because it is so wide. Let's take a look at it on the risk graph here. So go over here and let's just dial in that one spread, which is here. Okay, so we go to, let's go to Monday of next week. So as early as Monday of next week, if Tesla were to reject, and let's go back to our technical chart and just get a sense of, if Tesla were to reject this trend and fall back down to, the 50 MA area or this kind of breakout area here, that would bring you down to 640 to 620 area. What would the spread be like there, right? So at 640, theoretical P&L on the spread would be over $1,000. So cut that in half, maybe 500. If it drops all the way down to 620, theoretical P&L on the spread would be $2,000. So maybe $1,000. I mean, I just don't know. But you can see that if Tesla rejects and sells off, this spread is going to expand really nicely, right? Because it is such a wide spread. You have a 100-point wide spread. So the idea, I guess, that I'm trying to make to you, or the point I'm trying to make to you here is that when you put on any of these ratio spreads like this, the wider you can make the spread between your long strike and your short strikes, the more that spread will expand for you, the more profit potential that spread will provide for you if the stock moves in the direction of the spread. Okay, so this trade has a chance to really be a nice profitable trade if Tesla can really break down and sell off and really fail on this breakout. Again, I'm not predicting that will happen, but since we're able to put this on for a credit, it didn't cost us any money to give it a stab. The only downside is that it is requiring $10,500 in buying power for this one spread alone. Okay, so that is the downside. The last position we have open here, again, this is just a hedge. We have a long dated call vertical spread open that we opened for $164 debit on the VIX. So if the market were to sell off, this spread would obviously expand nicely for us. But as I speak, the market's breaking out to all-time highs. So this hedge is probably not going to really pay out for us. But right now, I'm going to continue to leave it on because we still have 81 days till expiration. So I'm not overly worried about that. And even if it were to expire worthless, we only paid $164 to open it. All right, so that's all of our positions. Really, going into next week, the only things that we have open, we have Apple here open for next week. That's our call debit spread. We have a call ratio open on AMC for next week. This is gone. This is gone. We have a call ratio open on Netflix for next week. This is gone. This is gone. And then we have 2 put ratios open on Tesla for next week, and we have this call debit spread open on the VIX. So just a handful of trades open going into next week, and then we'll see what opportunities we'll have at the first part of next week. So let's jump over here and wrap things up by looking at our journal. So doing pretty well. Total profit is up to $2,500, and so it looks like our win rate is about 58.3%, and average holding days about 5.83 days. Let's come down here and sort by the closing. Let's just look at everything that we closed out this week and just kind of get a sense of where we are. All right, that covers that. So there's actually a lot of red trades in here, but if we do the sum of the whole column, you can see $415.33 net P&L after fees and commissions. And actually, as I mentioned, that I forgot to put fees and commissions in here. So it's going to be a little bit less than that, but pretty close, pretty close. So it should still be over 400. So again, just another week where it turned out, another $400 to $500 week, doing pretty conservative for the most part, doing pretty conservative type of option spreads. Again, my favorites seem to be the ratio spreads. I really do love those. With those though, unfortunately, they do require a lot of buying power. So those of you guys who are kind of following along with smaller accounts will definitely have trouble doing those ratio spreads. But they make me a lot more comfortable than doing credit spreads a lot of the time. So I would say really the highlights from this past week, definitely, let's see, Tesla. This was the put ratios here. So we walked away with $470.93 in net P&L on that one. We collected just a really nice credit for opening those put ratios. Look at the option chain on that, and this is the trade right here. So this is where we originally opened the trade here. So we collected $152 on the first lot. We collected $157 on the second lot, and we collected $133 on the third lot. I was able to come in on the 22nd of June, and I closed the first lot that we collected $152 credit on. I closed it for a $21 credit. So $21 plus $152, $173 profit. And then I closed the second lot that same day for a $19 credit. So $19 plus $157, that closed out $176 profit on that one. And then this one right here is the last one that's expiring today. So we're just keeping the full credit we collected on that. So like I said, I mean, all said and done with, that's $482 in total credit that we brought in on that particular trade. So like just killer trade, and all it was for the most part credit collection, with the exception of these two here. We were able to close for a slightly higher credit than what we actually opened it for. So that's pretty cool. And then here's the put ratios open for next week, the 570, 500. And we have 3 lots on. So open one for $140 credit, second one for $138 credit. And you can see the next day, actually on the 23rd, the credit had already dropped so much. I opened it for a $66 credit. Jumping back over here to the journal, let's talk about other trades of note. Let's see. The mistake I made was right here. This one right here. This is the put credit spread that I opened on Tesla, and I opened 14 contracts. Total capital required on that was just over $6,500. And once I realized my mistake with that huge valley of death in the risk graph, it looked like I was pretty much guaranteed a profit anywhere above the ratio spread. But once I realized that huge valley of death, if Tesla had sold off, obviously there was a big area where I would have, the trade overall was very different from when I structured it, right? I would not have put this trade on if I had noticed that. So once I realized my mistake, I felt it was better to just go ahead and close the trade rather than leave it on, because it was obviously completely different from what I was originally planning. And again, that was a big mistake, because the next day Tesla traded higher, and instead of closing it for a $69 loss here, it would have been a winner. So that kind of, that's kind of a gut punch, but at the end of the day, it was a trade that was very different from what I was originally expecting when I put the trade on. So that one's kind of crappy that we lost $69 there, but yeah, I guess it could have been worse if Tesla did sell off. So that was that trade. And then today, this morning, I tried to buy some naked contracts. I bought some 530 calls this day of expiration on Netflix on the break higher. I thought it was really gonna, I thought it was really gonna squeeze higher. And I just got smoked on those contracts because it ended up reversing and came down so quickly. And let me tell you, it is hard to scalp option contracts in Tastyworks. I just was fumbling around the platform. I wasn't able to close everything quick enough. And before you know it, I lost 50% of, I put up $2,100 to buy 4 of the 530 calls. And by the time I closed them out, I lost 50% of that investment. Just, in minutes, the day of expiration. That's how quick they can just really just fall apart on you. So that really sucked. And then on top of that, I took the trade in the wrong account. I took it in my Roth account, and I always trade like the FANG stocks in my taxable account. So I'm gonna have to be careful about that with wash sale rules and everything. But anyways, that sucked right there. And then I took a trade on Roku, just trying to make back some of that loss. I bought a single put here on Roku, and it really just didn't expand as much as I thought it would. Again, same day expiration. Took it off for a small win there, $126 winner. And then I caught a really good trade here on Amazon. Amazon really sold off. One of my favorite contrarian scalp, kind of a counter trend play. I bought some 3,400 calls. I bought 3 of them at $21, and I got out at $24 for a really quick scalp and made $900 on that. So with these 2 trades here, it just about made back that loss from Netflix. So really, really close, but thankfully that saved the day right there. And that's about it, guys. That's, as you can see, this is everything I did this week in the swing trade account. I didn't do anything with futures or any other type of trading. Let's just go to our performance tab. So you can see the taxable account total net P&L is up to $1,800. The Roth account is still a little bit red, and overall up $528. So just slowly, and I'm not sure what's going on here. There's some kind of Google Finance error. I'll have to look into that. But just slowly clawing our way back, going over the strategies, credit spreads, still nice and profitable, iron condors, not profitable, ratio spreads over the 1K mark, so that's pretty cool. Yeah, that's about it, guys. Like I said, not a super exciting week in terms of our swing account. Not a whole lot going on. Man, the market is just ripping faces off right now. Wow. As we go into the market close here, about 45 minutes till the market closes. Anyways, yeah, like I said, not super exciting this week in terms of profits or anything in our swing account, but you just have to take, you just have to take what the market gives you. And right now, I just don't see a whole lot of things of interest to really be putting anything else on going into the weekend. But next week could be a completely different story. So we'll see what the market offers up for us next week. So with that said, guys, I always appreciate you following along with these videos. I hope you're doing really well, and we'll see you this weekend on Sunday for our watch list video for as we look to navigate the market heading into next week. So as always, guys, if you did enjoy the video, make sure you hit the like button. I do appreciate that. I hope you have a great weekend. Take care, and we'll see you in the next one.